Welcome everyone. Let's go through today's price action analysis of Bank Nifty futures using 1 minute candlestick chart, and we'll go through bar by bar analysis and see what trades were possible using the patterns like failed breakout, triangle, traps or give ups, right? And how to enter, where to place the stop, and where to book the profits, right? So you can see that I have put a risk is 10 points and reward is over 20, 30 or 40 points depending upon where we are initiating the trade, right? So if it is into the resistance and there is some room, we will go for scalp of 20 points. But if it is something after a two-legged pullback or decent room before it hits into the resistance like yesterday's high or low or EMA or trend line or trend channel line, there you go for swing trade of 40 points, right? So with that being explained, you can see that price opened above the EMA. It was a gap up, open here, it broke through this flag which was a channel or bull flag, right? Bears tried to apply the pressure, but it was held up by the bulls at the EMA. So some bullish pressure there, right? Bulls bought the close of bar 1 and it poked through yesterday's high. It managed to close above it, which is a bullish sign. We'll see what happens next. Most of the times whenever something like this happens, there is a pressure being applied by the bears and it might sustain, right? We just need to see that if it fails here and the bar closes good enough or strong enough, right? In this case, bar 3 is a failure of this bull breakout above yesterday's high. Bar closed nicely, so you have to be very fast, and that is only possible if you anticipate setups in advance, right? This is 1 minute chart. If you do not have automation set up, manual entries are really not impossible but difficult because they need fast execution, fast thinking, right? In this case, you have to go below this bar's low and entry is triggered on bar 4 immediately, right? So you can see this bar's low is 14,408, right? This bar went down by at least 20 points, right? Immediately my stop gets moved to break even, and after that whatever happens, right? What happened here is bulls bought to close the bar 4 and they pushed the prices up and my break-even stop was hit, right? Now this was another attempt by the bulls to get past yesterday's high. Again it failed, right? These bears who sold the close of bar 4 thinking that they have gotten into a good short trade, they scaled in here around yesterday's high. They pushed the prices up, but when they saw this bull bar, they were not sure what is happening here. So what they did is they scaled in and they gave up around at a break-even price. But some bears still held on, right? They scaled in about this bar, trapping these bulls who bought in here in this zone and pushed the prices down. But again, these bulls supported here near EMA, so they scaled around here in this zone and push the prices up. Like looking at this, even though there is a resistance nearby, which is yesterday's high, usually I don't want to go for such trades, which is because I know it doesn't work most of the time, but I still wanted to go for this. So here, looking at this bull bar, and it opened here, this bar 11 opened here, and this at this level it went down, which means these bears who sold the close of this bar, they scaled in and they gave up here, right? I bought in around about this bar high 9.80, so around 10 point something. Entry triggered, but it was weak. Okay, so what happens when you get into such trades as your emotions start kicking in, what's happening, and you tend to make mistakes. Do not do that. Either don't enter the trades that are not according to your plan, in other words they are not the right trades, or if you get into it, manage it well. Manage it well, wherein you're not letting your emotions decide what is to be done. Instead, see what is happening in terms of price action and go for it, right? First and the best option is to do not enter the trades that you are not comfortable with or that you haven't tested with. That is the best option. This entry triggered, but unfortunately no follow through, and my stop got hit on bar 13, right? So first trade break even exit, second trade bar stop got hit. Nothing much has been made and nothing has been given by Bank Nifty future as of now, actually speaking, because nothing has happened as of now, right? So my rule is to stop trading after two losing trades. Now this one is a break-even trade, so that's okay, and this one is a losing trade which was stopped out at 10 points. So I was okay to take one more trade, right? And I had to be really careful now, given the fact that I already lost in one trade. What happens is that you keep thinking about that lost trade too much and forget about what is happening right now. You have to focus on what is going on right now to be able to take the right trades and come out positive, right? Right? So here it goes. So what happens is the bulls made another attempt to go past yesterday's high. It failed here, and then what you see here is that uh, uh, bears were applying the pressure, but it was being soaked up by bulls. Every single time the bar went below just the previous bar's low, the tail was formed. That means bulls were applying the pressure. They managed to get past yesterday's high one more time. If the bears were really strong, what would have happened is that you would have seen the failure go through. Instead, what is happening is that these bulls are pushing the prices up. They applied the pressure one more time, and you see that they managed to get the poke through the EMA, right? But it was held and the bar closed above EMA only. At that moment, I drew this line and again a parallel line to see if it helps in terms of projections, right? Looking at this, well, you see this is an important price action here, right? These bulls who bought in here, they scaled in here. Some of them gave up, right? Because these beers were trying to scale in, so they gave up weak ones, or some of them held on. If this bar was really broken down, beers were really strong, this should have continued down. That did not happen even after this tail on top. Bulls immediately bought this bar, close of bar 24, and they pushed the prices above bar yesterday's high and closed at its high, which is a very important clue that is being dropped, right? Then bears made a weak attempt to push the prices down. That is where I felt that yes, these bears have given up. Now I want to get long, so I got long about this bar 26 high, which is where I entered on bar 27. It entered triggered, and then you see uh, this closed positively, but there is no momentum here. So again, you have to trust your plan and let it work. You're not going to mess up by looking at these bear bars and moving your stop to break even, or letting your emotions rule the decision making. That is the important piece, because otherwise you're not letting your plan to work, right? So what happened at the bar, these two bars were really taxing on the emotions, but you have to sit through and believe that your trade is going to work. It almost came uh, close to hitting my stop loss, but it did not. It was held. These tails that you see where basically bulls were buying, right? And that's where it was soaked up and the prices were pushed up, right? And it gave you a 40-point target. Now this is one push, this is second push. Is this a third push? Not immediately, because this 1 and 2 is just a barely poke about this, right? So I did not want to stall here in terms of the third push, right? And that's why I just let it go and I hit my 40 points target somewhere around on this bar, right? Once this happened, I was out. The remaining move here, I'm not explaining it, is because it is beyond the 40 minutes duration that I look at. But once you see this, I'm again explaining the important concept of trend lines and trade channel lines. This is the line that I drew, and I drew a parallel to it. What happened next is you can see that here is where it came all the way down to the channel low, which is basically this trend line, right? And that's exactly how these trend channel lines help you understand where the price possibly would go and project your profit uh, targets. Right now it has gone through and poked below yesterday's high as well as below this channel, so it might extend below this, or it might form another channel. Like in this case, you can see that here it is forming, this is the trend line, then you have this, right? So possibly now it is going into this channel. So this is all dynamic. You have to keep adjusting based on what you see here, right? And it is not difficult. It is very simple. You just need to identify important price points, which is swings, highs and lows, and join them. As many points as you can join that, the more important that train line or train channel line becomes, right? Okay, that's it. I hope it helped. Thanks for watching.